and welcome to another Smaulgld live stream. It is December 15th, Sunday, 2019, and tonight's topic, 2019 silver and gold wrap-up and 2020 outlook. Tonight is a combined show, Saturday night silver with Smaulgld and solid gold Sunday with Smaulgld. We're going to take a look at the year in gold and how it performed, and take a look at what might drive it next year, the price of gold and silver. First, let's take a look at how gold and silver did this year. The big drivers for gold and silver this year were negative interest rates, the explosion of negative interest rates, the Chinese trade negotiations, and central banks actually buying gold, not just Russia and China. But we saw Eastern European central banks, Poland, Hungary, Serbia, adding gold to their reserves. We also saw India, we've got some charts on that, adding gold to reserves for the first time in 10 years. Hungary for the first time in 50 years. Poland made a couple of big buys. So gold became more in focus by central banks, and there were a lot of statements from Eastern European central banks and Eastern European leaders about the instability of the financial system and criticism of the euro. So that did drive gold demand. Now, gold demand in general, retail demand was way down, retail physical demand, but gold demand in paper and digital form for institutions was way up. So we're going to take a look at some ETF numbers, but briefly, let's take a look at the U.S. Mint sales this year for both gold and silver. Now, keep in mind that gold and silver prices are not driven by the sales of at the U.S. Mint, even though Silver Eagles and Gold Eagles are the number one physically sold products. They don't account for, never have, a significant percentage of the overall gold or silver demand, but they are an indicator of the sentiment of retail buyers. Let's take a look first at gold this year. Now, gold sales were atrocious. Here is the 1986 to 2019 chart of American Gold Eagle sales, and you can see just 106,000 American Gold Eagle sold. That's the 1 ounce size, and that's the lowest since 2001, when only 94,000 were sold, and that's coming off of the Y2K year of 1,518,000 American Gold Eagles coins sold. And we were also in the middle of an internet boom, and you didn't really see gold sales pick up again until 2008. They hit a bit of a low in 2007, just prior to the financial crisis. But you can see there's a big drop off from the 2016 period just to 2019, 106,000. On the silver side, not much better. Let's take a look at American Silver Eagle sales for 2019. And they're pretty much done now because the U.S. Mint closes down early in December. Now, here you go again. Lowest since 2007. Lower than last year. Last year, the U.S. Mint sold 15.7 million American Silver Eagles. The year before, 2017, 18 million. And the peak was 47 million in 2015. But 2019 looks like we're finishing at about 14.8 million. And you got to go all the way back over a decade before you see the U.S. Mint selling less. So that does indicate a couple of things, and we'll get your thoughts at the end. I don't think it means that silver and gold are not viewed as a traditional store of value, especially gold, with the central banks buying, with the ETFs exploding. Let's take a look at the ETFs. I think it has to do with there's a generational shift, and a lot of people, they dismiss this. I think institutions, they may be made up of older investors, but they're not buying, and just like with any asset, they can't buy and store physical gold or silver. They never have. So that's why ETFs are very good products for institutions. But younger investors actually view holding on to physical assets as a negative, or any assets. They tend to rent, they like smaller houses, they consume digital media. They've never been consumers of DVDs, VHS, CDs, physical books. They consume everything digitally, and that is a significant change to the older generation, which may have as its motto, if you can't hold it, you don't own it. That doesn't seem to be as big of a concern for millennials and younger. They seem to think if you have to hold something, it's a nuisance. If you have to hold something, it's holding you down, so to speak. But look at the gold ETF demand. Now, this is a digital asset. You don't hold anything. You don't get the gold sent to your house. It's very hard to even get gold delivery, even at the ETFs like the Smaulgld ETF, which does allow it under certain circumstances. Most people who buy gold ETFs buy them for the convenience, the click of the mouse. You get in and out of the price of gold, and you never see gold. But you can see that the demand for that product is near an all-time high. There's about 80 million ounces, and it went up a lot in 2019, 80 million ounces of gold held in gold ETFs. Silver story is similar. It shows that there's investor interest in silver, but not in holding. Now, silver, you can understand why some people wouldn't want to hold silver if they have a lot of money. It just takes up a lot of space, and we're going to get into the gold-silver ratio. The gold-silver ratio, very high at the moment, and it didn't come down in 2019, but you can see 700 million ounces in silver ETFs, tailed off a bit the last month or so. And I think that's a function, as we mentioned a couple of weeks back, we were talking about whether 2019 rally in gold and silver was over, and I think it was. I think it is over. You may see a bit of a rally at the end of the year, but I think what's happening now, and you can see it in the commitment of traders, institutions have locked in their profits for the year, and then they're probably selling to other institutions who want to get on the bandwagon and say they held gold or silver this year. So we're not really seeing much price movement. There's not a lot of conviction in either direction, long or short. But I think that's about to change in January, because what drove gold higher and silver higher in 2019, that dynamic is not going away. You still have negative interest rates, although they've crept up a bit. You still have central banks buying gold. I think the China deal is a red herring. I think that has been a short-term trading signal all year. But whether the United States does a deal with China or not, I don't think really changes the dynamic of gold or silver. Now, the election in 2020 may change that dynamic. I think at the moment right now, Trump is probably neutral to bad for gold, whereas a Democrat win would be positive for gold, because the Democrat plans of the frontrunners all involve even more spending than Trump has initiated. Although if a Republican Congress and a Democrat president get in, I don't think much will change, because the Republicans probably wouldn't go for all of the grand spending plans. But I think we can say that the rally in gold and silver this year is ended. Let's take a look at the prices this year, the 1 year gold price. Gold was up fairly significantly this year. It went up to, that's the gold silver ratio we're looking at. We want to look at the gold price. Let's take a look at that first. Here's the 1 year gold price. That was the 1 year gold silver ratio briefly. So here's the 1 year gold price, up 17.77%. And you can see it's trailed off since its peak in September, and has held in the over the $1,450 range now for over a month. And that's probably a good sign that that's the new base. You could see it spiked up to finally over the 1375 glass ceiling that it had tried to bump up against for 7 or 8 years. It finally burst through that, and then consolidated in that $1,400 range through the summer. And then in August, it spurted up again to $1,500, and then to $1,550 in September, and then drifted downwards. But it looks like it's formed a base again now, much higher at $1,450. And I would imagine if it can continue through the end of the year, as traders take their positions in January. January is generally a good month for gold, and we could see the price burst through the 1550 level, and that probably would give it a clear path to 1600. Now, silver went along for the ride this year with gold, and let's take a look at the silver. But silver did not rise as much as gold. It's not really a good sign, but it's not a bad sign. As you know, my thesis is that silver, since 1974, when I would think you can compare gold and silver on an apples-to-apples basis, in the sense that both have been demonetized by governments as a monetary metal for use in day-to-day or even central bank to central bank use, and both now trade. COMEX trading for both started in 1975, and gold was made legal to own again by Americans in 1975, at the end of 1974, meaning that both products, and both have ETFs, can be purchased by Americans, and both are traded on the COMEX. The difference being that gold has retained a monetary component with central banks, and that silver has a much higher percentage of its demand coming from industry. And I think that's where silver falls short, and why the gold-silver ratio has risen since 1974. However, there have been two periods where silver rose more than gold, and that was in the case of 79-80 and 2009 to 2011, when you had significant financial crisis / inflation issues, and that drove the price of gold higher, and then it took silver along with it. Silver has a smaller investment component demand as a percentage of overall demand, but because it's such a small metal, and when silver looks cheap to gold, when people are rushing into gold because of financial crisis or inflation, then silver does catch a bid, and because of the small size, it actually outperforms gold. But in periods of time where you're not in a crisis, you're just in a slow burn, then silver pretty much trades as a commodity where the demand is being met and its monetary component is undervalued, meaning that people are not concerned as much. They're not buying a lot of physical metal. They're not even trading the silver price higher. Whereas gold always has the monetary component that the banks are holding, and that rich individuals and institutions will allocate some of their money to gold. And silver has never been one where institutions have thought that it was a good idea to allocate a certain percentage of their money to silver, and central banks do not hold silver as a reserve asset. And that's what I think has led for the higher gold-silver ratio. Let's just take a quick look at that gold-silver ratio this year. Even though gold had a good year and silver had a good year, the gold-silver ratio still rose. Here is the 1 year. You could see it actually went up a bit. It started the year at about 85 and closed the year about 86 to 1. Still very high. Let's look at a 10-year chart. Something I've been talking about for at least 7 years now is that the gold-silver ratio is not unsustainable and is not out of whack. It's pretty much the way it should be, and it won't come down. And you can see the time when it was down on this chart was 2011, when silver had its spike because gold had its spike. If gold is not spiking, then silver's not spiking. Silver has not had an independent spike since 1974. It's generally followed a increase in the gold price. The only way for silver to have an independent spike would be for it to do something like palladium, where there is some type of shortage in industry. Now, a lot of the silver pumpers will tell you silver is so useful in our lives, we can't live our lives without silver. Silver is used in everything, but the amounts that it's used are not so significant that the demand for silver isn't being met. Palladium is such a small market, far smaller than silver, even smaller than platinum, that there's barely enough palladium to meet the demand for catalytic converters. But you can see here on the chart, the gold-silver ratio has risen, and silver, I think, was up slightly less than gold this year, and that's why you had the gold-silver ratio not really go anywhere. However, it's a very positive sign for both metals that gold put in a near 20% gain, and so did silver. And again, my thesis is that if gold has a sustained bull market, not a good year, then eventually silver will outperform gold. So maybe 2020 might be that year. But let's take a look now at the, let's see what we want to see here. The silver, oh, I know what we want to look at. The Dow versus the gold. Now that's an important component too of the gold price, because investors have choices. Not all of them are thinking about disaster. Remember, if you are thinking about portfolio management, you may buy gold as a percentage of your portfolio as portfolio insurance. You're not looking to get a capital gain out of it. You're just looking to leave it there in case the stock market goes down, or in case there's some type of currency crisis, in which case the gold, if you have it at a percentage, let's say 5-10%, you lose 20-30% in the stock market, but the gold manages to double. You can offset a lot of your losses that way. That's what a lot of gold holding is essentially been for institutional investors. However, when institutional investors and traders buy gold because they think it's going to rise, irrespective of what the stock market is going to do, then you can see gold go higher. What's holding that trade back is, while gold did rise about 20% this year, so did the Dow. So stock traders would throw their money at stocks, S&P, just the indexes, and you can still do better than gold. Now, you can't. Gold will outperform the dollar, but dollar-denominated assets in the stock market have outperformed gold. You can see gold on this chart. While it did well in 2019, it started the year pretty much at 17.5 to 1, the Dow gold ratio, but it actually closed up to about 19 to 1 as the Dow actually outperformed gold this year. At one point, gold was outperforming the Dow in the summertime when it hit 1550, but the strong rally towards the end of the year and the fall off in the price in the Dow and the fall off in the price of gold, the end of the year shows that the Dow actually outperformed gold this year. Now, the thing about stock valuations are there are limits. I know in today's world we do have companies that trade at very high valuations, not even multiples, because they don't have any revenues. Any earnings. They have revenues, and they've increased in value despite the lack of earnings. But there's still a limit on how much a stock can be valued. And no matter how much you pump a stock, at some point, even a valuation times revenue starts to look ridiculous. Whereas gold has a relatively fixed amount, only a certain amount, maybe 2, 3, 4% of the entire amount of gold available comes online each year through mining, and makes it possible for gold to actually double, whereas it's harder for stocks to double just based on valuations. But you can get a rush of demand into gold, and especially silver, because there's even less of it. It's a smaller market, and that's why you could have those spikes in gold and silver, and especially silver. But so far, we see that the Dow has been the place where investors are comfortable, and I'm sure that this year we saw a lot of investors also take somewhat of a hedge on gold. Now, if they see that the stock market rally is not going to continue, then you may see more investors put money into gold, not just as a hedge, but also looking to preserve some gains and get some gains from the upside in gold. But I think what's going to drive it next year is going to be politics. It's going to be whether Trump wins or not. And we're not going to talk about it tonight, but I reviewed all of the documents relating to the impeachment and also to the Inspector General's report, and also looked at some historical models, or looked at some other recent presidential election results, and it looks like Trump is going to win in 2020, and we'll have to discuss what that'll mean. But right now, obstruction of Congress is not a crime. We're not going to discuss it tonight. And the abuse of power, these are just things that they're throwing at him for impeachment for lack of having an actual case, which they had hoped the Russian collusion case would have been it. But so I think that's what's going to drive the gold price, the trading price, absent any type of financial crisis, which could happen at any point. All right, what else do we have here? India has been a big driver of gold and silver the past 10 years. And this year, the one thing that's interesting about gold and silver is on the physical side, at least for India, is higher prices don't mean higher demand in India. Indians can help drive the price higher with voracious buying of physical, but when that price peaks, they stop buying. And you can see gold and Indian rupee the last couple of years, especially this year, rose about 30-35%, and they slammed the brakes on mid-year. Now, the price in Indian rupees has gone down a bit, and they've started buying again, but you can't count on heavy physical buying to drive the price of gold from India because they will stop buying it as the price goes higher. And we saw that again with silver. The biggest year for Indian silver imports was the year the price was the lowest, and that was 2015 when they bought nearly 300 million ounces, or imported 300 million ounces. But even silver's getting a little pricey in Indian rupee, as you can see on the chart there. India, as I mentioned, also adding to gold reserves. Just started last year in 2018. They added another 30 or 40 tons in 2019, and they're above 600 tons. But you can see for a while they weren't buying. In 2000, they had not added gold. In fact, they sold a little gold in 1997 or 8. They've added it back. But it highlights that the Indian government doesn't have, 600 tons of gold is a lot of gold, but it's not, puts them in the top 10. But the amount of gold that's in India in temples and private citizens' hands is about 23,000 tons. Same thing with China. So central banks are not the largest owner of gold. I think globally they own about 25% of the gold. But citizens clearly own, and ETFs and other warehouses have more gold, at least according to the records that the central banks release. Now, who knows how much gold any of these central banks have, including the U.S., China, Russia. You can only go by what they report. And I think that's about it for tonight on silver and gold. Yeah, so we'll try to circle back on the impeachment process and the IG report and the upcoming Durham Bar, probably prosecutions, and see what that means for the price. But let's see what you guys are saying. By the way, I didn't even get a notification of my own, of this broadcast, and I know a lot of people have notified me and said what's happened. I don't get any notifications. They don't get the notification that one has been scheduled, and then when I go live they don't get the notification. So pretty much I'm going to be finished with YouTube. I've actually lost subscribers, which makes no sense whatsoever. I've got I've never been able to crack 4,000 subscribers, and for a while I was stuck at 3,780, and now I'm at 3,770. So clearly YouTube is just essentially just ignores my channel. I don't think they ban it. I think they've just put it on the pay no mind list, and that's about it. And that just means that I get more of a audience over on BitChute, which doesn't make any sense. If you have nearly 4,000 subscribers on YouTube, and YouTube is a much bigger platform, why I would get more views on BitChute? We'll only have 305 subscribers over there. It just shows that the 305 subscribers on BitChute actually get the notification and look at every video. I do post the videos over to the Smaulgld patrons, of which there's about a dozen or so, and then there's about 5 Smaulgld Subscribe Star members, and of course they view those videos. But through YouTube, the platform is just good for the live stream, and then it converts into a BitChute, and then I put it up on my own site, smaulgld.com, and then also I send it out to the patrons and to Subscribe Star members, and you can find it, obviously, if you're looking for it on YouTube, But otherwise, you're not going to see it on YouTube because it's not going to be featured or recommended in any way, shape, or form. So that's the status of that. And let's see. So now I only got 18 people here tonight, but that's okay. Let's see what the comments are. We got William Berkerode says good info. CoinsAZ says hello everyone. And JN says, will the UK election result call the price of gold, silver to decrease? That's a good question. If you remember in 2016, the idea of Brexit sent gold and silver soaring that night. It was supposed to be the biggest disaster. But I think now people have realized it's been 3 years, over 3 years, since the election or the referendum to leave the EU. And now it looks like it's going to happen because in the UK elections, for those of you who don't know, the Conservative Party of Boris Johnson, which presumably is in favor of Brexit, won a resounding victory that put them with the most seats since the Thatcher era. Now, theoretically, they could have gotten the deal done earlier, but Theresa May, the former British Prime Minister, was also conservative. She was unable to, she seemed to be tepid on Brexit in the first place, and it seemed like a lot of the Tories were kind of like in America with the rhinos. They weren't really gung-ho about Brexit. But now it looks like the new breed of Tories that got elected, they are in favor of it. Probably will happen, but I don't think the markets are going to be as reactive or negatively reactive against Brexit, because I think there was just a lot of hype around it, because Britain's not going anywhere. It still never was part of the euro. It's got the British pound. They can still strike trade agreements that are favorable to both the EU and Britain. So it's not like the idea was that somehow UK was going to go into the third world country. No one was going to use the City of London anymore. The pound was going to collapse and England was going to be isolated. I don't think that's the case. I think markets have adjusted to that's probably not going to be the case. They may not negotiate a full agreement. They may have to pay some money, but I don't think it's going to be an issue for gold or silver. Just like I don't think any China deal that the U.S. eventually strikes. I think what's driven gold higher, the Chinese U.S.-China negotiations, is just the uncertainty that there won't be a deal. So once there is a deal, then there's certainty, then the gold price goes down. Gold and silver don't like certainty. They thrive when there's uncertainty. So just, it's not that the issue is, I think, China and the U.S. not having a deal. It's the uncertainty of not having a deal that drives the price higher. And then when they think they're going to have a deal, then the certainty of perhaps there being a deal, then the price goes lower. But I don't think that's a fundamental driver of gold or silver. I do think China's debt issue is a fundamental driver. China is defaulting on its U.S. dollar-denominated debt. All this nonsense about China to crush the dollar, game changer, gold back yuan, multipolar world, Belt and Road. That's all proven to have been a bunch of nonsense, as I've said for years. But the gold pumpers love the China pump. And my point on China has always been that gold's not going to go higher because of China's gold back yuan, but gold can actually go higher because China could set off an international financial crisis by defaulting on its massive debt. I mean, the gold pumpers made it sound like the United States is just this massive debt-producing world country that doesn't do anything except consume products from China and borrow money. Well, that's half the story. China borrows even more money in order to produce those products and ship them to the U.S. and also to produce stuff that no one ever uses. And they borrow in dollars, so that's actually good for the dollar. And it's not like China can dump the dollar because they owe more dollars because that's what the currency they borrow in. All right, any other questions? Well, that looks to be about it. So I want to thank everyone for joining me tonight. If you want to support this channel, please consider doing so because it does need it, because it does not get any additional viewers through YouTube. You can donate via Bitcoin or Litecoin by holding your phone up to the QR codes that you have on the screen. You can support Smaulgld by check or sending item of value or cash to Smaulgld LLC, P.O. Box 714, Dover, New Hampshire 03820. Or you can become a Smaulgld patron or you can make a one-time or recurring donation on PayPal, or you can join Subscribestar and donate that way. And of course, you can always, I do want to thank the people who have been purchasing Smaulgld Mugs and Smaulgld products over on Smaulgld.com. Remember, mugs are real wealth. So you got to have your Smaulgld mug and start stacking those as well. So thank you very much, everyone, and we will see you soon. Have a good night. Oh, and Bernie has not been paid, so he's not showing up. And even if I do get paid, I probably won't give it to Bernie. But that's a separate issue. Maybe we'll... what are you talking about? The 1% in this country have got all... Bernie, you're not being paid, so shut up.